Making the simple complicated is commonplace. Making the complicated simple awesomely simple, that's creative. Charles Mingus. My friends, we learn simplicity here 10 to 15 minutes every day, going through these charts, culling what it is we learn, simplifying it. Simple is best. Occam's razor, the simplest way to do things. Now again, as Einstein told us, make things as simple as possible, not simpler. Occam, John of Occam, a Franciscan friar back in the day, he's the one that came up with Occam's razor, or Occam's principle, that again, the whether it's a mechanical device, whether it is like what we do using these charts, keeping it as simple as you can is always going to work better than making it more complicated. I can remember when I first started trading many, many years ago, I had charts that were so complicated, it was difficult to ever make a decision. You had analysis paralysis. We try to stay away from that. We look for weekly vertical crossovers, which invariably work again and again and again for us. Now let's jump into these charts and see what we see. By the way, Bitcoin fans, check it out. We talked about Bitcoin hopefully bottoming, or maybe it was just getting ready to fall off the cliff again. Well, that happened after 3 weeks of sort of sliding sideways after it hit the bottom around the $36,600 mark or so. Things fell today, down 11.64%. At the close of the day, down to $31,808.70. Don't know how much lower. Well, the low for the day, actually all the way down to, yeah, that was the 31,000. So it ended at the low. And again, you know, that's tough. Opened at 40 and ended at 31,800 and something. So again, tough, very tough. So I again would just tell you to keep watching, pay attention to what you see. If you're a big Bitcoin fan, on this price percent oscillator and the derivative oscillator still gaining downward momentum. 2-day chart spiking over, going down. Also, half-day chart crossed over, going down there throughout the day. Crossed over in the morning, continuing down. So again, tough for Bitcoin. Now, let's go to the S&P 500. We see things up just barely, 0.03%. That's not 3%. That's not 0.3%, that's 0.03%. So barely edging up. The high last week, 422.92. The high so far this week, 423.21. So again, edging up a little higher throughout the course of the week. But and only 2 days in, but we see the price percent oscillator continuing to pull away from the red signal line derivative oscillator, continuing to lose momentum. Even as this market tries to edge up, we see that divergence. It's been playing itself out since the weekly vertical crossover occurred. So again, any skittishness in the market is totally understandable on your part. Check out the 2-day. It has steadfastly refused to cross over going up. Again, would like to see that occur because it would make it easier if indeed things revert back to the mean and crossover going down. We'd have a simple 2-day recross. Now we do see, we'll go to the Qs in just a minute, but we can see that the derivative oscillator has gone positive, but that price percent oscillator is just flat, just continually flat. And again, edged up a little higher high with the latest candle. Look at the half-day chart. It did cross over, and again, you know, edging along, trying to bump up, and we'll continue to watch and see what there is to see. 222.92 and 222.94, and of course, we saw that high on the Monday-Tuesday candle of 223.21. So again, this latest candle that's forming has not hit that high. So I'm sorry, that was in the morning, and then the latest candle in the afternoon didn't manage to go up that high. So derivative oscillator gaining a little bit of momentum, price percent oscillator actually slipping a little bit at the end of the day. And again, that's our smallest chart. What we're really paying attention to is that 2-day, and in particular, that weekly. Now let's go take a look at the Qs, see the same kind of thing occurring. We have a green up candle for the week. Price percent oscillator still negative, derivative oscillator still negative, losing a little bit of downward momentum so far this week. Go to the 2-day. We had that 2-day crossover when that Monday candle finished drawing. So we do see things moving up for the Tuesday candle. It's the first day of this latest 2-day candle. And we will go ahead and redraw our trend. Well, we can't connect that trend line to anything though yet because this candle's not finished drawing. We'll just do it there so we know which way it's going at a quick glance. Derivative oscillator gaining some upward momentum, price percent oscillator heading up. So this gives us the opportunity in the Qs at least that if this market does fail and things cross back over going down, we'll have a 2-day recross for jumping in. As we look at things in the morning, booming up in the morning, rolling back a little in the afternoon, and again, for all that, up 0.05%. Again, that's not 5%, that's not 0.5%, that's 0.05%. So that's where we are as far as the Qs go. Things continuing to tick up, but when we look at where things are, again, we've not reached the higher highs that we saw back earlier on the Qs. So we'll continue to watch, see how things progress. Let's move on to bonds. What do we see there? Well, on the weekly chart, remember bonds crossed over going up. And we have that on our chart, that weekly vertical crossover going up all the way back on the 30th of April. Then sideways, down, and then for the last going into the third week right now, 2 days into the third week, we see things moving up in bonds. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. 2-day chart. We can see where things are a-booming. I mean, again, it's up 0.69%, but we can see the Heikin-Ashi candlestick reflecting that, going up and touching the 50-period moving average line. And again, that's where we are on the 2-day. See if we can, oops, I screwed up the 4-hour. Let's redraw that 2-day. There we go. And we see the price percent oscillator pulling away from the red signal line, derivative oscillator heading up. And let me fix this half-day. Oh, daggone it. I grabbed the wrong one. There we go. Let's fix that half-day, and let me go back and fix the 2-day that I screwed up. There we are. Okay. So we look at the half-day, and of course it crossed over going up back on the morning of the 4th, Friday the 4th. Up on Friday, little sideways on Monday, and up on Tuesday, leveling off a little bit on Tuesday afternoon. But again, bonds trying to keep moving up. Now, what does it typically mean when bonds go up? That stocks typically are going down. Why? Because money leaves stocks, goes into bonds, a safer haven. Bonds are going up. So it is interesting with the divergence we see in price on the S&P and on the Qs, and bonds moving up. Just curious. Just noting that. Pay attention to it. Keep it in mind. Lastly, we'll go to gold. Gold losing a little bit of steam for the day. We look at it, it's down 0.31%. Besides Bitcoin, that's our only other down chart. And of course, this week is a slowdown. We can see a red open box candle. Means it's a slowdown in the up movement. We can also see that in the price percent oscillators, it's losing some of that angle, as is the derivative oscillator 2-day chart. We can see where things have been sliding sideways now for 5 days after things were peaking back on Tuesday, the 1st of June. We can see where we've had things sliding sideways since then. Are we going to have a 2-day crossover going down in gold? Derivative oscillators lost a lot of energy. That, of course, for those of you who didn't jump into gold when we had that weekly vertical crossover, might give you an opportunity to jump back in it if we have a crossover going down and then a recross at some point going up on the 2-day. That can always be helpful, so we'll continue to watch. What about the half-day chart when we had that big down movement in gold last Thursday, the 3rd of June? And of course, we saw things really spike down at that point, and then moving up for 2 days, and then, of course, sideways, losing a little bit and down on Tuesday. So we'll continue to watch, see where these charts lead us. That's where we are, my friends. Thank you so much for being with us. If you don't have our book, we'd love to send an autographed copy for you. Follow the link in the show notes to purchase one. Thank you again, all the Patreon supporters, for all your help. God bless. All the best from the whole team at Charting Wealth World Headquarters.